Hi, everyone. Welcome to Real Estate Tips with Shireen. I have Mitchell Wells here with AmeriFirst, and he is here to talk about low interest rates. Mitchell, how are you?
Hey, Shireen, doing great. Enjoying this beautiful day out here today.
I see that. I'm a little jealous. As you can
Really
see, my
nice.
background here is the office, but that's okay.
Welcome fall. Yeah.
Mitchell, you have a lot of experience with the mortgage industry. I mean, over 30 years, you've helped us with a lot of clients, even international investors. But the one thing that I'm getting, especially right now in current events, is the low interest rates. People are constantly asking me about that, and I'd just love to get your take on that.
Yeah, let's talk about the current market. I mean, as we've all heard and know now, rates are at a historical low. There's lots of refinances going on. The only downside of that is kind of clogging up a lot of the lenders' pipelines, and things are moving slower through the process. Appraisers are very slow. They're kind of, you know, having a hard time handling the volume right now. So there's a lot going on in the market, and rates are historically low. A lot of people are refinancing. It's a great opportunity right now for buyers too, because you can have a little bit more purchasing power, buy in at a little bit higher price but a lower rate. So that's available for people. But there's two main things, I guess, that I see going on in the market right now I think is really critical for consumers. And that is, number one, there's when you're trying to pick your lender and find the rate for your program, whether you're refinancing or buying, you're getting quoted an interest rate, but there's also cost involved. And lenders can tend to use what a term I really kind of hate, but it is a term that happens, and that's kind of a bait and switch. So you might get quoted a very low interest rate, but if you're not comparing the costs that are going along with that deal, it can change later. And, it's kind of a technique or something that some lenders use, I think, that most consumers might not be aware of. So just make sure the way you can hedge against that is just make sure you're getting a written estimate from your lender that does give you your quote for your rate and the costs associated with it, and how secure that lender feels that that's going to go all the way through your deal. If there's any things that could affect that credit score, how much down payment you're putting down, all these things can have an impact. Secondly, with refinances, because they don't happen all the time, but in this low rate market, many homeowners are refinancing, and the government is actually instilling a new adverse market fee coming up starting December 1st, and that's going to be built into the rate quote for a lot of consumers. So you may notice that refinance rates may start going up a little bit just because this new kind of adverse market fee that Fannie Mae and Freddie Mac are building into there is going to be priced into your rate quote. Basically, I think they're hedging against the possibility of future defaults in the marketplace. Maybe they're seeing some of that coming with some of the forbearances and furloughs with jobs and types things. So just be careful with that. Yeah.
Right. How long do you expect these historically low rates to stay with us?
The market has got a lot of stimulus built into it right now, and that's one of the reasons the rates have pushed so low. So I feel like we're going to see that hang in there for a little while. We're under 3% for 30-year fix now. So through the end of the year on into the new year, obviously the election is going to be a big impact possibly on our economy and our market. So that's something to keep in mind. But yeah, I think we'll see it kind of stay in this realm for a while. The Fed just decided to keep the Fed rate low. So
Good.
yeah.
That's great. And Mitchell, one last question. What's the best way to contact you?
So the best way for me is through either my cell phone, you can text or call me, or through my email or my website, which we probably will post that for everyone. But usually the cell's the best way. That way, if I'm outside enjoying the weather, you can get me on the phone still.
Great, great. Well, Mitchell, thanks again for joining us. I really appreciate it.
Yeah, my pleasure. And I just want to say one more thing, as we've discussed before, Shireen, and some other talks we've had, the key to navigating all of these kind of intricate details and all the stuff that can face a consumer is just get a referral from someone you trust. And that way, the lender you're working with is someone you can trust, is an advocate for you, and it kind of will help take a look at all of these options and things that could affect your interest rate and the quotes you're getting, and that you can trust is not going to bait and switch you and raise your rates and everything, later. So.
Yeah, that's great advice. And my other thing that I always tell my buyers, if you don't understand something or a term, ask, because if you don't know it, I guarantee you 1,000 other people will know it. So that's the best thing to do, is ask.
True. Totally agree. Yeah.
All right. Well, thanks again, Mitchell, for joining me. I
My
really
pleasure.
appreciate it.
Anytime.
Those are some great tips. And guys, if you want more real estate tips, please like this video. You can follow us on Instagram, Facebook, LinkedIn, and YouTube. And if you're interested in buying or selling your home, please feel free to send me a message or contact me, 919-771-3068, and also to get Mitchell's information as well. All right, have a great day.